Welcome back to another episode of the Millennial Gems Podcast. It is your host, KILLA, and today we're going to get into a pretty highly debated topic. Still goes on to date, and that's going to be business versus real estate versus the stock market. Now, I'm sure people have their bias of which they prefer. Me, I definitely know I have my bias, stock market for sure. But again, to each their own. You find what best vehicle helps you create wealth. But anyway, let's get into it. So, we're going to break this down simply by similarities, differences, pros and cons, and then return on investment. And then, quite honest, after all this, you can determine which one may work best for you. I'll let you just know right now, I can't speak too much to real estate because I haven't dabbled in that. So I'm only going to be going based off of kind of like assumptions and kind of just whatever little knowledge I have to pull on it about it. So just bear with me. Don't crucify me, but, hear me out. All right. So let's first get into the similarities, right? So as far as the similarities, these are three great vehicles for building wealth. So make sure you got your pen and pad, because the first thing is very obvious. Generates income. All three of these you can generate income from. Business, obviously you get it from sales. Stock market, you can get it from dividends and returns. And real estate, obviously you receive that in payouts from your tenants paying rent and a mortgage and stuff like that. All right. Next is all three appreciate in value over time. So your business, continues to grow, gets bigger and bigger. You get eventually people who want to invest in it. Stock market, companies continue to get higher and higher in the stock market. Their market cap grows higher. And then, real estate, it obviously appreciates over time. So, they all are good for appreciation. Number three is create financial freedom. Now, again, like I said, these are the top three vehicles. These are the big three when it comes to trying to build wealth. You typically want to get in one of these when you want to talk about financial freedom. You're going to choose one of these lanes here to get you there. Because you can't work your way to wealth. You can't save your way to wealth. It just won't happen. You have to get in one of these vehicles. Number 4, benefit from compounding. So doing these things over again, having repeated sales from business and reinvesting back into the business to make it bigger. Stock market, constantly either dollar cost averaging or, honestly just putting money into the stock every time a company pulls back, just loading the boat. Things like that. Real estate, benefit of compounding with real estate. You take more money and you put it right back into your business so that way you can buy more properties. All right, number 5, requirement of knowledge and risk management. So you definitely have to have some type of foundational knowledge of, how to run a business or the type of business you want to start. Or when it comes to the stock market, you need to understand, what companies you want to get into. Or when it comes to real estate, obviously knowing the demographic of where you are, the lay of the land of where you are. You want to know what neighborhoods are being built out. What are the school systems like? So you want to attain like properties, and you want to make sure you get like the knowledge that you need to help you, make the best moves possible. And then obviously it requires some type of risk management. Like stock market, you definitely have to practice very high risk management. Same with the business here. You don't want to put all your eggs in one basket. You kind of just want to take it slow and build it over time. Kind of the same thing with real estate. A lot of risk that comes along with it. So, and then the last one, kind of tied into like financial freedom, is it's gonna make you wealthy over time. Like I said, you cannot save your way to wealth. You can't do it. Your job is not gonna make you wealthy. So I'll just tell you that right now. Just get that out your head. You cannot save your way to wealth. Your job will not make you wealthy. You have to get into one of these lanes if you want to get wealthy. All right. So those are just the similarities of the three of them. Now, let's actually get into some of the differences. So the first category we're going to talk about is control. Now, business gives you you have high control. You have so much control when it comes to business because you're the one who's running it. It's your idea. You're the one who's running it. You are the CEO. You are the boss. You are the creator. You are the owner. You have so much control because you have to build out everything. You have to put everything into place. You have to understand the business at the back of your hand. So you're going to have control of what goes where, who you fired, all that stuff like that, who you hire. You have control of all that. Stock market, not so much. See, stock market is kind of just run based on the New York Stock Exchange and the NASDAQ and the Dow Jones. So you have no control of that. It's not tangible. You can't touch it. So you have literally no control over what the stock market does. Stock market goes up, of course you win. Stock market goes down, that's out of your control. There's nothing you can do about it. That's just what it is. That's just part of the game. Now, real estate, I would think that this is more so on like the medium to high side. Just because one, it is a kind of a tangible thing, kind of just like how a business is. It can be tangible. I mean, you can get to, obviously you have so much more control of real estate because it's physical properties. So, getting to your properties and stuff like that, that's very much, you have all the control when it comes to that. You control how much people pay in rent and stuff like that. You have so much control. So you would say that the business and probably real estate probably win in this category. Now, startup capital. Now, it's for a business, because I've had a couple businesses and a couple things that I've tried. So low to medium startup capital. Now, when I was in e-commerce, like definitely, I didn't need a whole lot of money. I definitely could have done better about like how I went about spending my money as far as inventory, but I definitely didn't need a whole lot. And you definitely don't need, a ton of money to get started in like a business, depending on maybe what the business is. Most of the time, it's just, you just have a lower barrier to entry. Again, it just kind of depends on the business. But in the stock market, you definitely don't need a whole lot of money. That's a whole myth. You don't need a lot of money to get started in the stock market. You can start with as low as $50, $100, anything like that. How much will it get you? Just depends on the type of stock that you're getting in the company, but you can start as low as that. The barrier entry is low there. Now, when it comes to real estate, I've always felt like this is definitely on the medium to higher end because I think you definitely need a whole lot of money to purchase a property. I don't believe in you can purchase property for zero money down. Like I don't. Again, I could be wrong, but I just don't believe that. Point me to somebody who can tell me otherwise. But yeah, I just think that the startup capital required for real estate is definitely on the higher side. So I think business and stock market definitely wins on this one. Now, as far as time required, business, you need to put so much time into starting a business. You got to put everything into place. Everything has got to fall into place. Yeah, you just have to be a laser focused when it comes to business. When it comes to the stock market, you don't really need to be super lasered in. It's definitely good to spend, at least 2 to 4 hours a day, understanding, companies, evaluating companies. If you're trading, understanding charts and stuff like that, technical analysis. But you don't need that much time required. Now, as far as real estate, again, I can only speak for so much on real estate, so I don't know how much actual time might be required. I'm sure you got to definitely spend time trying to find properties, finding the right neighborhoods, and having discussions with people. So, yeah, I'm sure it's definitely kind of on the medium side. So I say, as far as like time required, obviously the stock market kind of wins in this category here. Now, as far as risk level, highest level of risk definitely I think comes from starting a business, right? So as far as just like, the type of business that you start, there are a lot of high risk businesses out there. So, you know, there are a lot of like banks that won't give money to certain businesses because they're that high risk. So, starting a business is risky, but you know what? So is working for 40 years and only being free for however working till 65 and only having however many years left to think. That's also risky too. That's not living life. So, you choose your part. Choose your which risk you want to take. As far as the stock market, I would say it's more so like a medium risk level because you do need to practice good risk management when it comes to trading and when it comes to investing in stocks. You definitely don't want to dump all your money into one thing. You do want to try to preserve and have some capital to the side. Um, but there is going to be some type of risk level. Like again, you're going to have days where the stock market goes up and you're going to make a bunch of money, and then there's going to be days where the money goes down and you're just going to be like, damn, that ate up a lot of what's in the market. That's just the game. You gotta understand. Like you gotta be willing to go through the drawdown, sit in the red for a little bit. That's just part of the game. And then as far as real estate, the risk level, again, I don't know too much about, the risk. So, I won't speak too much on that because I won't know how risky it is. But I mean, I'm sure it can definitely be a risky business, especially when it comes to dealing with, tenants and other people and stuff like that. And then having to deal with, people, doing all kind of weird stuff that could really mess up, your properties. All right, now let's get into scalability, right? So scalability, when it comes to the business, obviously scalability is literally astronomical. Like, well, actually, let's just say across the board. Scalability is across the board on all three. It's very definitely a little higher in business for sure because obviously, the bigger you build your business, the more money it makes, the more value it becomes. So you can definitely, I think, like as far as this category here, business might win. Stock market, you can definitely scale, in the stock market too. You just buy and hold, and then you just watch the companies grow and grow over years, over 10, 20 years. And yeah, so, you're scaling your investment accounts that way. And then kind of the same thing with real estate. You purchase a property because everything appreciates, right? And so you can definitely scale, your real estate business from, I don't know, however much you decide to put into however whatever number you want it to go to. I believe that there's just no cap on how much you can make in either of these industries here. So all three of them win as far as scalability. Now, as far as cash flow speed, right? Now, cash flow speed, business is always going to be very quick. Why? Because you're going to be getting sales almost every day, every hour, every minute, depending on, how fast sales are coming in. But sales, cash flow speed, you're definitely going to be getting quicker cash flow than the other two. Now, stock market, definitely on the opposite end of this. This is a little bit more like the slower kind of medium side. Because again, unless you're getting dividends, the stock market is a slow game. This is a slow, long game. Like there's no rushing in the stock market. You have to play the slow game, the long game. That's just what it is in the stock market. Now, as far as real estate, I mean, I could think that this is a little bit more on the medium side, but I mean, I'm assuming that's just coming from the fact that you're getting, tenants rent and mortgage every month. Obviously, it depends on just how many tenants and mortgages you have. Who knows? You're getting paid every day, or you can be getting paid like who knows. But anyway, that I think that's just a little bit more so on the medium side. So as far as cash flow, I definitely believe that business wins on this as far as just how quick you can get it. Now, passive income. Now, passive income, I would say first off, the top of this one is definitely going to be the stock market, simply because, like I said, I've mentioned before, dividends. Dividends is just simply just an award that companies pay out to, people like us, retail investors, for investing in the companies. And so, that could be your way of getting passive income. Dividends can be paid, quarterly. They can be paid monthly. They can be biannually, semi-annually. But that's a perfect way to get passive income. When it comes to business, at first, it's not going to be like that. Like eventually you have to build your business up to a point where it can become reoccurring, but you still have to the only little tricky caveat to this is that you still have to be involved in the business for quite some time. So it's like at first you're definitely not gonna get it like that. You're not gonna get it. You have to kind of work build your business up to a point where you can receive passive income. But it's never gonna be there perfectly. Like stock market, you can put your money into a company that gives you dividends, and from that point on, you don't have to do anything. As far as real estate, passive income, I mean, I think this is a little bit maybe more on like the moderate side, maybe. Again, like your passive income is gonna come from, obviously receiving payments, rent, payments of rent from tenants and the mortgages and stuff like that. So, you know, that's just what I think of with real estate there. A little bit more so on the moderate side. So I think in this category, stock market wins. Next, we're gonna get into the tax advantages. Now, let's say for a business and for real estate, there are definitely very high tax advantages, um, because there are plenty of deductions, there are plenty of write-offs. There are just many ways to help keep your tax bill really low when it comes to business and real estate. Now, as far as the stock market, it's okay, just because like there aren't really too many write-offs that I can think of advantages because anything you make in a market, obviously capital gains wise, short term tax, anything you buy or sell, you gotta report that. So I think it's maybe on like the moderate to like lower side for sure. But yeah, I think as far as just tax advantages, business and real estate kind of wins in that category there. So that takes care of what are the differences for all of them. Now, let's get into kind of these individually now. So we're going to start with running a business. Now, I can speak to running a business because I've once sold, athletic apparel. I've once sold, I once did Amazon FBM and stuff like that. So I've used Amazon and I've used Shopify to get into e-commerce. So I've sold things before. So again, I hope you guys are taking notes. But what are some of the pros of running a business? One of them is you have unlimited income potential for sure. You have full control over your decisions. You can scale rapidly. You have tax advantages. And you can be sold for a larger payout. So if you start a company and you build it to a point where, bigger investors, they want to invest in your company, well, you can sell it for how much more money than you put into it. So you can sell your company for quite a lot of money. Now, what are the cons of running a business? Well, there are going to be long hours. In order to build a business, you have to be 2 feet in. You have to do everything. You're going to be consuming it's going to consume a lot of your time for sure. Another thing is that most businesses fail. So, that's just, you guys got to understand that this is a long game. Hopefully you choose the right business, the right industry where, you're not going to be discouraged or, probably sits at like a high risk or so. But yeah, a lot of businesses fail. Because because that's just, they don't survive. They don't know how to adapt. They don't know how to grow. There's a lot of things that contribute to why business can fail, but they do fail. Just understand that. Next thing is income can be consistent. Now, when it comes to business, you're definitely going to be in seasons. Like you're not going to always get paid every time. Like there's going to be days where you don't get paid at all. Believe me, I've gone through it. There's just times where you're going to see like a little season where you're seeing the sales come in, and then it's just gonna come like that month or two, that couple weeks where you're just like, damn, man, I ain't seen my numbers then kind of drop off, or sometimes you're just not even gonna get paid. So that's just what it is. Especially if you have like a product business, if you have a service based business, you're not getting paid until somebody pays their reoccurring fee or so like that. So income isn't always gonna be consistent. And then the last one would be sometimes you have to have employees. Sometimes, you have to deal with employees, you have customers that can create headaches, Again, me personally, I don't see myself having a business where I have employees. That's just not what I want. But I mean, if you want employees, you're gonna have to deal with paying employees and giving them benefits. You have to understand that's just what it's gonna come with. Customers, obviously, any customer complaints, customers or concerns, you got to be the one to address that. So, and that's even if you have like a online business too, you got to be able to address that. Now let's talk about like the return on investment, right? So, say you invest $5,000 to start your business, right? And then let's say after 1 year, you make like $50,000 in revenue. Well, let's just say that out of that 50,000, you'll profit say like 20,000, right? So your return on investment is just going to be the the 20,000 in profit that you made minus the 5,000 you started with divided by the 5,000 times 100, right? And so that's altogether your return on investment's about 300%. So that's pretty good, like I would say probably out of all three of these, business probably might have the highest return on investment. But obviously that's because it requires the most effort. So you can definitely see high returns on your business. But again, it's just going to come with the amount of effort that you decide to put in. So next, the stock market. Now, the pros of the stock market, right? This is one of my personal favorites. So getting into stock market is very easy. Low barrier to entry. It's very easy. Like I said, you probably only need like $50, $100 to get started, as long as you find the right companies, quality companies, that is. But yes, stock market is very easy to get into. Kind of like how I'm just saying here, you can invest with small amounts. You don't need a lot of money. Remember, that is a myth. You don't need a lot of money to start in the stock market. Historically grows over time. Again, like I've mentioned before, the stock market is a long game. So you want to make sure you're invested in companies for, holding companies for about 5 to 10 years. Shout out to the master investor. Shout out to the guys over at EYL, Earn Your Leisure, Wall Street Trapper, Aristotle Investments. It's very liquid, right? Very liquid. It's easy to buy, easy to sell. It's easy to put your money in, easy to take your money back out. Very easy. And then stock market is truly passive. Like I said, when you get companies that offer dividends, that's money you make in your sleep every single, well, maybe not every single day, but like, monthly, depending on like when the dividends actually, are paying out. It could be every day. It could be every couple of days, but it's definitely truly passive for sure, the stock market. Making money while you sleep, that's definitely the way. Now, what can be some cons of being in the stock market? Well, obviously, like I said, you have no control over the companies, right? You have no control of what the stock market does. If it goes up, you win. If it goes down, there's nothing you can do about that. You just have to ride the wave on that. You got to bite the bullet. That's just the game. Market crashes do happen. We clearly saw it in 2020 when the pandemic happened. Everything just kind of stopped. Everything fell to the bottom. It helped. It recovered, but that's just a game. There are market crashes. There have been plenty of market crashes that happen. Another thing is that emotional investing hurts returns, right? You don't want to have your emotions involved when it comes to investing. You want to make sure that when you're buying companies, you understand the company you're buying into. You want to make sure that, you're not buying just based off the hype and stuff like that, and not buying just because it's a hot commodity right now. You want to make sure you're buying quality companies. All right. So, and then the last one is just that it's slow building, it's slow building, slower than, getting than a successful business, right? So again, you have to play the long game. That's just what it is. Accept the fact that when you get into the stock market, you have to play the long game. That's just what it's going to be. Now, as far as return on investment, return on investment, let's say you invest, say, like 10,000, average return per year in the stock market could be like 10%, right? Which, say, like after like year one, you're up 11,000, right? Well, your return on investment is 10%, right? So after 20 plus years, compounding comes powerful. So it's literally just, you have to allow time to work. You have to allow your money to work for you over time. Like, you work so hard for money, well, let your money work for you. And that just may mean that you have to let it sit for, 20, 30 years. But it's going to be compounding and it's going to be accumulating more, which is going to get you to that wealth. All right. Now, the last one, real estate. So with real estate, you have pros. You have the cash flow from your tenants, which I've mentioned on numerous occasions. You have your property appreciations. Again, it appreciates over time. You have leverage with the mortgages. You have plenty of tax benefits. And again, it's a tangible asset. And you can physically touch it. The stock market, you can't touch that. A business, you can't touch it if it's a brick and mortar or so. But again, it's all just, it's tangible. You can get to it easy. Now, as far as the cons, you're looking at definitely a larger upfront capital. The barrier to entry is not that easy there. You got to definitely have some capital for that. Repairs, maintenance, you got to deal with that. Tenant issues. And then it's less liquid than stocks. Like, when you put your money into real estate, again, I don't know how easy it is, but I don't think it's as easy as there's no way you're going to get your money out as quick as if you put it into stocks. It ain't that easy. It's not that liquid like that. It's not easily liquidable like that. Now, as far as the return on investment example, let's say you buy your property for $300,000. You put a down payment of 60%, of 60,000. And then let's say your property increases $30,000, right? Or you just had some cash flow right there of $6,000. That's your profit, right? And so your total gain from it is $36,000. Now, if you take the return on investment, you would take the 36,000, divide that by the 60K, and times that by 100, right? And then result is you got 60% on your return on investment. But the real thing that makes real estate what it is just having the leverage. Leverage is what makes real estate, the most powerful, right? So, what is the formula that millionaires use? So, start a business to create large cash flow, right? Make sure you're writing these down. So, number one, and you don't have to do this specifically, but I'm just saying, like, this is the millionaire formula to what I learned. You want to start a business, so that way that helps create cash flow. Then you want to use the profits from your business to invest in the stock market and buy real estate. And then you're going to let the stocks and the real estate create the passive income while your business generates the active income. So that's how you utilize all three. Now, you don't have to utilize all three. You can simply just choose two of the lanes there. If you want to go business real estate, do that. If you want to go stock market real estate, do that. If you want to go business stock market, you can do that. That's my preferred two. Business stock market, that's just me. Business can make you create active income. The stock market can give me passive income. That's just my thing. But if you want to go about it that way, that would be the formula that I say, most millionaires probably work. Most wealthy people probably do. Create a business that creates cash flow. Take the cash flow, put that into stocks and real estate, and then you use the stocks and real estate as your passive income and business as your active income, right? So if you had $10,000 today, would you put it into a business, in the stock market, or into real estate? It's up to you. You do what you feel is best for you. that wraps up another episode of the Millennial Gems podcast. I'll see you on the next one. Peace.